Hey, good evening, people. Excuse me. It's the 18th of February, and it's another day in the markets today. And as you can see, make up your mind. This markets, make up your mind. I mean, it's quite interesting because it just seems like we have a market that just couldn't really decide where it wants to go. Because, I think the last few days it's been kind of sideways. Is it going up? Is it going down? Is it sideways? And I mean, I know what I'm doing, but we're just not exactly sure. And and this is why I've got the title. So let me just quickly share my screen. I'm gonna try and keep it short tonight because I do have quite a few things to say. So just please bear with me. I'm trying to get this thing out. Oh God, I got stuck. This dual screen thing. Do you ever get stuck sometimes? Let me see if I can separate it. Oh, duplicate tabs and move it away. So yeah, my screen got dualized, even though I only want one of them. Okay, boom. I got the cues now. Let's share my screen. So I hope you've all had a great trading day. Like I said, I do have quite a few things to discuss today, and well, I hope you, I hope you come with me. So where are we? Good. So here are the cues today, the 18th of February, 2026. Now, first and foremost, what do we have? It's kind of an interesting day today because we did have an up market. Strangely, yes, I know we haven't had it in a while. You're gonna be like, hooray. But anyway, so no fluff. I'm just giving you raw footage here. And you can see here, it's just about 1%. But again, like I keep saying, make up a mind market. Every time it wants to come down, we do get this news about why it's gonna stay up. And of course, look at this too. You can see this is actually very perfect. Look at this faint lines. So the market's been 605, you gotta write that down, and 636. The market has been on those two levels. This pivot point, very important. So that's what the market's doing. 605, 636. 605, 636. I'm gonna say anything below that, we're in danger. Anything above that, then it's hooray. And how long has that been going on for? Look at that. We've been having this, we've stuck in this range since October 2025. So that's been 3 months. We've been around up and down, um, wouldn't exactly call it 7% range. Yeah, up and down 5% range. And it's just crazy. The market just couldn't make its mind up. So a few things I read today, and I'm just going to talk about it. Number one, I think we had Fed officials to signal little appetite for reducing interest rates last month. And according to the newly reports January meetings, which is what it's saying, I think we all know Kevin Wash he's fairly hawkish. But anyway, so most central bankers indicated that they want to see further progress on inflation before considering any further cuts, a progress that could take months, even though two officials opposed the decision to hold rates today, characterizing the prospect of a rate cut, or sorry, they opposed the decision to hold rates steady and favored a cut. Minutes showed that other officials would have supported more neutral language. They would have supported more neutral language. Where are we? Characterizing a prospect of a rate cut or a rate increase as evenly balanced. In other Fed news, the central bank wants to change how you shop for a mortgage, but I'm not going to talk about that. I'm focused on the market. So stock indices are moving a bit higher today and also on solid US economic news that indicates a resilient economy. Also, AI jitters have temporarily eased, lifting chip makers and software stocks. Now, we're going to talk about software stocks. So market moves in cycles. That's something wanted to say. Market moves in cycles, and leadership rarely disappears. The leadership tends to stay there. It rotates, consolidates, and eventually reemerges. And that's what happens. So you got to understand that. That's a really great quote today. Now, second thing I noticed today was the restaurants. Look at that. So unfortunately or fortunately, markets has kind of been in cycle, in steady. It just wouldn't make its mind up. which, like I said again, which is it's good for some people. It's good for me. For me, I don't like a market that just keeps going straight up or straight down. I think I said this yesterday. You know, sideways, consolidates, next leg up, consolidates, leg down. That's fine, but don't just go straight up. That's too boring, too predictive. Make us work a little bit for the money. I like that. You know, too much predictability, it gets to be horrible in the long run. Okay, so we also have the restaurants, which I was talking about. So if you look at Wing, for example, so Wing as a stock, look at Wing. This had a huge 10% move. Impressive. So, and of course, not just the restaurant, even restaurant related. I think we also had Wendy as well, actually. I have never traded it, but I've looked at Wendy in a while, and I just saw Wendy. I thought, what is going on? 16%. So, this could just be markets moving in sympathy with each other. We could see similar names, they move together. Look at that. Now we've got the software stocks related to the restaurants. That's green. Look at Toast. Look at Carver. There you go, 7%. So I could see these things forming like a good base, and then it looks like they are ready for the next leg up. Again, not financial advice, just what I am seeing. So that's what I saw today. Another one I saw was, and I talked about this one here, solar. I think I saw solar, but let me just quickly look at this one here. This is a Pacific gap. This is energy. I was looking at this today, and this just seemed very, very impressive to me, about to just go break the highs. So it's definitely come out from whatever down it's been in, got stuck in there, and it's just been gradually, gently picking up. This is for long termers there. If you're a long termer, this is probably a great one for you. Park, buy, and just park and wait to there. Does it pay any dividend at all? Oh, 1% dividend. Why not? You get paid to hold it. So that's that one. The next one I was looking at again today, looking at solar, been talking about it. AI cannot, what's AI going to do with solar? Not a lot. There you go. So we're looking at this here, Array Technologies. This has been on 5 years. It just can't get out of its own way. Again, the next one, again, next power, again, speaking of solar, which AI cannot just, disengage from the market. How do you make artificial sun? Hey, ChatGPT, can you make artificial sun? Impossible. So that's that one. Think quite a few of the ETFs as well. I think TAN. I've been looking at TAN since 25. Well, I left it a bit early, but this is TAN right here, now at 60. Couldn't believe it. I mentioned this to the guys in the group when it was at 25, 30. If you're patient enough, you would have made it here. So that's one here. I think there's another one here. Yeah, not that one I was looking for. Yeah, sorry. I think I was just looking at the entire XLI generally, which was, yeah, State Street's, well, this is quite high. But anyway, this has got nothing to do with the banks. I was just looking at the banks, and this is one of the notes I made. But sorry, solar, and this is one of the notes I made. So yes, also back to the solar, I think look at TE here, T1 Energy, amazing. All these guys have started picking up. Though I'm not a biggest fan, not a big fan of TE, but look, it is what it is. Money is money. It's 600% from the lows of 500% in the last 6 months. Impressive. I think also Solar Edge, even though Solar Edge and Phase, Solar Edge was actually down today, but look at Enphase. Yeah, all these guys are in the low, but solar generally, you don't just want to pick what's low. Make sure the fundamentals back it up. I think FSLY is one of the best, solar energy plays, I probably will say. And not Fastly, First Solar. Where are we? First Solar. There you go. FSLR, apologize. There you go. 5% today. It wasn't even part of my notes. So that's that one. Another one again today. This is 13F season. And I think is made the news as well. Oliver, I think Warren Buffett had about 10 million Amazon shares, for which is cut it to about 2 million. And what does that tell me? It tells me this tells me a lot. I think Greg Abel just wants to stamp his foot. Of course, Buffett's going to be Buffett. I think he's probably just trying to define his own legacy. Of course, he's going to carry on with the culture, but he wants to define his own legacy, and we shall see how this goes. So yeah, but one more important thing I wanted to say is the fact that all, and this is interesting, actually, very interesting, because all Magnificent Seven, they've been down this year. Look at Amazon, they're all red this year. Look at Tesla and just focus on this point here, year to date. Tesla's down 9%. Look at Google. They've all been front runners since 2025. Look at Google, down 3.5. Look at Apple. So if your portfolio is struggling, maybe relax. Look at Nvidia. Where are we? Nvidia. Nvidia is also down. How much? 1%. So they've all been down year to date. Or what's it? Okay, Netflix. Netflix also still stuck in this drama with Warner Bros. Down again year to date. It's 18% down. So Netflix seems to be gradually, gently picking up, but the story still remains. All Magnificent Seven are still down. So 13F does not go beyond Buffett. We got the big names, Appaloosa, for example. We got Mac, the most intelligent thing. I forgot his name. That's one of the guys as well. Even Michael Burry, which I tend to listen to. It's quite interesting actually because I think Peter Thiel just literally sold out everything. And so we got the big money managers, and they are looking at even Bill as well, Bill Hackman. That's one Bill Ackman. That's one of the guys, not Hackman, Ackman. Okay. Also, this is interesting to me. Interesting to me. Does that mean we found the bottom for software? I'm not going to say I call the bottom. I don't know because it's kind of looks like software just got a little bit of a reversal today. Let's do a reversal. Look at that, consolidating. So software seems that I'm just looking at one of the biggest sector right here, and it seems to me that software just found the bottom. Is it buy zone? I don't know, just what I can see. So, of course, I'm going to take my decision. It's up to you to take your decision, but I'm looking at that. We are back to 2024 lows, 2-year lows or more. And in fact, if you trace it all the way back right there, we are back to 3-year low on software, and I could see some of the things picking up. Now is one I was looking at. ServiceNow. ServiceNow has been picking up from the lows of 98. I think Duolingo's down today. I don't know if it picked up towards the end of the day. Duolingo, again, look at that. I was calling for 100, but look, we didn't exactly get 100. We got a 109. But look, this is just $3 from the low. I'm still not interested in this at all because over the last 5 years, I'm still seeing red. And this right here, don't tell me AI cannot take this Duolingo job. Honestly, I don't know, but I think it can. That's another one there. So talking Duolingo, we got quite a few of them. Even Palantir, which is AI, but again, software, caught a great up, caught a great upgrade today. Let's look at Palantir. But look at that, it was up 4%, but still couldn't hold. We're going to talk a bit more about Palantir in a minute. So quite a few. Look at that trade desk. This is how you catch the lows. And I'm not bottom fishing, but trade desk has had how the mighty fell from 141 all the way to 25. So we got quite a few mega names that has just been, heavily underwater. Just looking at them right there. So yes, so I don't know if we caught the bottom in software yet, but that's what it's looking like, just based on the pure reversal that we had today, but we shall see. And finally, Michael Burry, is he actually right about Palantir? Because I've got an extensive write-up here, which I'm gonna read, if you don't mind, please. And please bear with me. Not too much, but it's just a bit of an extensive reading. And here we are. So is Michael Burry right on his analysis? Palantir Technology, of course. I think Palantir moved to Florida, where it was announced today anyway. So Palantir has been is tumbled about 24% year to date. There's a sharp reversal from which is a sharp reversal from 135% um, highs. Look at that. That's a 437% over the past 5 years. So it's still banking on heavy, heavy gains. But the S&P is essentially flat, so down a negligible 0.14%. So market cap of Palantir is about 313 billion, and the stock trades at a trailing PE of 219x. This is one of the things that's putting people off. Palantir trading at 219x, which is far above the industry's average of 30 to 50x, reflecting the history of unprofitability until recent quarters. The forward PE is at 123x, still premium, but more digestible given expected earnings growth. The P price to sales is a lofty 69x versus historical averages for high growth software as SaaS firms in the 10 to 20x range during the expansion phases. So this metric argue in favor of Burry's thesis that Palantir is expensive. So if you look at the fundamentals, Palantir is expensive. However, if you it underscores AI stocks transition. Once a cash burning startup, it's now generating software-like margins as revenue scales. The stock actually is not undervalued by any stretch, but calling it undervalued ignores this earnings inflection underway. It's trading at a price that prices in continued hypergrowth rather than the past. Now, here's what's wrong with Burry's analysis. Its critique, while thorough, feels stuck in Palantir's rearview mirror. His deep dive into historical accounting quirks, like accounting receivable exploding faster than revenue in the build years, as persistent shareholder dilution highlights real issues from 2020 to 2023. But anyway, generally, I'm just going to look into what are the analysts saying. Now, Wall Street remains broadly optimistic on Palantir despite the recent pullback. And according to quite a few of them, 25 analysts, which I was looking at earlier, they covered the stock rating it a moderate buy with an average score of 3.76 on a 1 to 5 scale, where 5 is a strong buy. And the breakdown is telling us that, from 25, 12 feel very strong rating, 10 holds, 1 moderate sell, and 2 strong sell. So this market's notable upgrade from 3 months ago, which we even had today, consensus was weaker hold with only 4 strong buys. The improved sentiment reflects Palantir's strong Q4 earnings and 2026 guidance that beats expectation. They had a record guide and record beating this year. So the mean price target stands at $200, 200.4 for Palantir, implying a potential upside of 53% with highs reaching 260 and lows at $90. Analysts see the commercial acceleration and AIP-driven efficiency as sustainable, projecting continued 50% top-line growth and margin expansion through 2028. While not unanimous, some worry about competition from big tech. The consensus tilts bullish, viewing Palantir as a leader in enterprise AI than a bulk stock. So generally, that's what I read. So I think the industry generally disagree with, or the analysts disagree with Michael Burry, even though his average price was what? 46 US dollars. Anyway, that's all I've got for tonight. Like I said, try to keep it a bit short. Sorry if it was a bit too extended, but I hope you got some value from this. And I shall see you in the field again tomorrow. You take care and have a good